Hi, my friends. Welcome to ZC's Finance channel. This is the second episode of ZC's 5-Minute Financial series. Today, we're pulling back the curtain on George Soros' 1992 Black Wednesday, short of the British pound, one of the most legendary trades in history, where he crushed the Bank of England and pocketed over $1 billion in just a month, leaving the UK economy reeling for a decade. First, let's set the stage. In the late 1982, the UK joined the European Exchange Rate Mechanism, a system designed to keep European currencies stable by pegging them to the German mark. The UK's promise to keep the pound at a minimum of 2.95 marks per pound. But by 1992, cracks emerged. Germany's post-reunification spending pushed its interest rates up, while the UK struggled with high inflation over 9% and slow growth. The pound's peg to the strong mark became unsustainable, and Soros saw his opening. August 1992, the research deep dive. Soros didn't just follow ERM rules, he dug into the UK's economic fragility. His team analyzed UK GDP data growing at just 0.5%, unemployment rates over 10%, and the Bank of England's limited reserves around £26 billion. They also noticed a key flaw. The UK's commitment to the ERM peg clashed with its need to cut interest rates to boost growth. By late August, Soros concluded the pound would break the ERM peg, and he set his target short the pound until it fell below 2.70 marks. Early September 1992, building leverage aggressively. Here's where Soros doubled down. Unlike his quiet yen trade, the pound's weakness was obvious, but he amplified his bet. He borrowed over £10 billion, leveraged 10 to 1, using just £1 billion of his own capital from UK and European banks. He didn't hide across jurisdictions. Instead, he used forward contracts and currency swaps to lock in short positions, betting the pound would plummet. By the 10th of September, his team had built a £15 billion short position, enough to challenge the Bank of England directly. The 15th of September, 1992, selling to break the peg. Soros's traders didn't hold back. On September 15 later called Black Wednesday, they dumped £2.3 billion of pounds hourly on the foreign exchange market, converting them to marks and dollars. The Bank of England fought back. It raised interest rates from 10 to 12% and even announced a planned hike to 15% to attract investors to the pound, and spent over £15 billion of its reserves buying pounds to prop up the price. But Soros kept selling. His team calculated the bank's reserves would run out fast. By the end of the 16th of September, the pound had crashed below 2.70 marks, and the UK had no choice but to withdraw from the ERM. Late September 1992, closing the position and cashing in. When the UK left the ERM on the 17th of September, the pound plummeted to 2.50 marks per pound, exactly where Soros predicted. He didn't rush to close. Instead, he waited 3 more days for the pound to stabilize, then bought back the £15 billion he'd borrowed at the lower rate. Let's do the math. He sold £15 billion at 2.95 marks, pound worth tilde 44.25 billion marks, and bought them back at 2.50 marks, pound costing tilde 37.5 billion marks. After fees and repaying loans, he netted over $1 billion, earning him the nickname the man who broke the Bank of England. The impact on the UK. For the UK, the damage was long-lasting. The pound lost 15% of its value against the mark in a week, making imports like food and oil 0% more expensive and pushing inflation higher. The Bank of England's reserves dropped by over 60% from £26 billion to £10 billion in just 2 weeks. GDP growth collapsed from 1.2% in 1992 to minus 0.5% in 1993, and unemployment rose to 11.5%. It took until 200210 years later for the UK economy to fully recover to its pre-1992 strength. So what's the takeaway? Soros's win wasn't just about timing, it was about exploiting a fundamental mismatch between a country's policy promises and its economic reality. He didn't just trade a currency, he outlasted a central bank, a masterclass in courage and analysis, and a brutal lesson for the UK. If you like this breakdown, hit the like button and subscribe for more 5-minute finance stories. In the next episode, we'll explore how Soros targeted Southeast Asian currencies in 1997, triggering the Asian financial crisis. If you're interested, please subscribe to my channel. Thank you.